Okay, so this last video with regard to activities costing is really more of a review. We're going to look at a little sample scenario for a service-related company. And we're also going to review some of the benefits and difficulties in implementing an activity-based costing system. So we talked about this earlier. Accuracy is by far the most important benefit that we're going to get from activity-based costing. And when we have more accuracy right here, this third bullet point, better management decisions can be made. And a lot of that has to do with something as simple as just how much are we going to sell our product for. That's extremely, extremely important. It says that that we have enhanced control over overhead costs. Well, I'm not sure how true that is, but what we could say is we're able to identify all of our major components of overhead costs much more accurately. Let's say it that way. Some limitations, however, are going to be that activity-based costing, it says it can be expensive. It is going to be expensive, but the question becomes, does the benefit outweigh that extra cost? And if it does, well, then we probably want to use it. If we get more accuracy, but the cost exceeds the benefit of that accuracy, then we don't want to use activity-based costing. Some arbitrary allocations continue. That is true story, because we looked at the example in a previous video where we were basically, let's see, now what did we do? We were breaking things down into three major cost pools. I believe we had machine setup, machine hours, and then inspections. Those were the three. But we indicated that we might actually have a lot more cost pools at play. It's just that they aren't significant enough, or they're not anywhere near as significant as the three that we identified. Well, that individually, we can discount those other cost pools, but sometimes in the aggregate, they can cause this phenomenon here. Okay, so you may have, for example, noticed, we were assigning $2,000 to every inspection that we had. Okay, and that's not because it necessarily costs $2,000 to perform an inspection. It may cost far, far less than that. Okay, but that is the result of arbitrary allocations. And if we break every activity down into an activity cost pool, it's going to be very, very accurate, but super, super expensive. Okay. And we need to use ABC, activity-based costing, when one or more of the following conditions exist. We have a lot of items here, and some of these are probably more important than others, but this is a really good one right here. Products differ in volume. We saw that example with the automotive product that we looked at in the previous video. One product sold, we had activity levels 5 times that of the lower volume product, and we saw that with activity-based costing, the fixed cost component of dealing with that low volume product meant that a lot of overhead was allocated to the low volume product. Sometimes, now I don't know that in our example we were dealing with a difference in complexity, but I do recall that could be possible because the number of inspections that we had for the low volume product or 3 times that of the high volume product. Okay. When we have numerous product lines, we are likely to have different major cost drivers for each of those product lines. Now depending on how many different cost drivers we have, we may be able to just use departmental overhead rates. But if we have a lot of different activities with very, very different cost drivers, then using departmental rates won't suffice, and ABC becomes a better option for us. And then we have some additional concerns down here below. So as a review, as activity-based costing can be used only in a process cost system. The reason why this is, in my view, kind of technically true is because with job order costing, we're trying to determine the cost of a specific job. Now, where that gets a little bit convoluted, in my view, is if we're essentially making, a handful of products and we're saying, okay, this job of these same items for this customer, and then this is a job of the same type of products for this customer, and there's not really much of a lack of customization, or there's a lack of customization. It gets a little bit dicey there, but the reason that this is true is because of point B. Activity-based costing focuses on units of production, whereas job order costing focuses rather on the job itself. Activity-based costing does focus on activities performed in producing a product. So these activities are going to result in cost drivers, and cost drivers are going to fuel the overhead application component of product cost. And then finally, we might be using multiple activity cost pools, but we're only going to use a single basis, for example, machine hours, number of inspections, for each of these cost pools. There is some difficulty in implementing activity-based costing. It says that here that a large proportion of overhead costs are company-wide that we may not be able to trace to specific services. And this is a true statement. And then when we add that to the fact that we have all of these other very, very small activities that are going on that do contribute to factory overhead, it is very time consuming and somewhat complex to implement activity-based costing. Now, once we do it, and once we figure out that let's say that it is worth it, that's okay. But this is not something that companies do unless there is a need for it. And I will tell you that the current trends in manufacture are more towards lean manufacturing. And so activity-based costing, while still very, very much in use, is somewhat viewed as kind of somewhere in the middle between modern lean manufacturing and traditional costing. In fact, you might see some resources that refer to activity-based costing as a part of traditional costing. So let's look at an example here. We looked at an example for a manufacturing company. Let's look at an example for a service-related business. This is appears to be a public accounting firm. And in the annual budget, this particular firm has estimated revenues to be $2 million. Now, direct labor, and this is going to be primarily the secretarial staff and then the accountants, this is probably a pretty solid estimate here of $600,000. This would be a fairly small, a very small accounting firm. And then what they've done is they say, well, we expect annual overhead to be 1.2 million. And again, this might also be a fairly accurate figure. So that means that total overhead costs, total costs for the year are 1.8 million. And that projected operating income for the year is $200,000. So we can come up with, again, this is traditional costing, we can come up with a predetermined overhead rate of 200%. And we got there by using the estimated amount of overhead, which is always going to be our numerator, and dividing that by direct labor cost. Not direct labor hours, but direct labor cost, and we came up with a percentage of 200%. Okay, now what we're looking at here is looks like it's an individual project. It's not a monthly amount of revenue necessarily. It is an individual project for this Plano molding company, and they're performing an audit. So the revenue for this audit is $260,000. Okay, which is a lot of revenue for one audit on a firm this size, but be that as it may. So we can determine that the amount of professional labor, $70,000. This is going to be an exact figure here. We're going to apply overhead based on that 200%. So we're going to say overhead is $140,000, and operating income for this specific project is $50,000. And again, this is a traditional costing system. However, if we were to use an activity-based costing budget for the same job, now recall this $1.2 million in estimated overhead, that's an annual amount. But if we use, and we don't have time to go through each one of these items, but we can see that we have our activity cost pool. These are 1, 2, 3, 4, 5, 6, 7, 8 activity cost pools that are common for this CPA firm. And then we have the corresponding cost driver. What is driving the cost in these cost pools? Okay, the most appropriate cost driver. And of this 1.2 million, we've broken it down. How did we get there? Okay. Well, once we've done all of these 3 steps here, we can come up with expected use and an overhead rate. And so you can see that we're getting very, very specific here in terms of our activity-based overhead rates. Okay, so we're probably going to have a different number for operating income using activity-based costing. So we have our same 8 activity cost pools, our same 8 cost drivers. Then we have our actual use of said driver multiplied by the activity-based rate that we already established, then the cost assigned to the project. So before, I believe we had $140,000 of overhead allocated. Here we have $165,000. So the revenues are going to be whatever the revenues are. So this does not change with traditional or activity-based costing. Our direct labor also does not change. However, our applied overhead changed dramatically. And so, at least with regard to this Plano Molding Company audit, we can say that activity-based costing has done a far superior job at predicting operating income than traditional costing. 9.6 is literally half of 19.2, and 24.9 is very, very close. 24.9 times 2 is just almost 50,000, okay? So we can see that there is a tremendous gap here, and that for this firm, activity-based costing provides far, far more valuable information. So there, if you're in one of the classes, there are some review slides following this slide you should go over. Otherwise, that will be the final video for activity-based costing.